Aloha, I'm Stan.
I'm Amanda, and we're SC Finance Strategies and Insurance Consultants and experts on the infinite banking tax-free cash growth warehouse strategy.
We're going to talk about using the TFCGW account as a business sweep account. Watch till the end because we're going to explain exactly why this method is so much more valuable than using any other type of account. Now, the money you have in a bank, the more money you have in the bank, the more you can withdraw and the more stuff you can buy.
Did I hear somebody say, duh?
Yeah, well, the same thing is true with your tax-free cash growth warehouse, or TFCGW for short. Difference is, when you withdraw money from your bank account, it stops earning any interest.
As if banks are paying any interest these days.
Yeah. Well, with a TFCGW account, you don't withdraw from the account, you leverage the account, and as a result, your money continues to earn interest even as you use it to, in this case, buy inventory and pay expenses. Now, I really love the tax-free cash growth warehouse TFCGW strategy for this. Obviously, the greater the funding of a policy, the more you can do with it, and the more it gains for you.
And remember, the gains are tax-free.
Yeah. This example is using a service-type business with a known regular monthly cost of expenses. However, this strategy works just as well for a business that sells products. The sweep account idea would be used in the same way. The expenses in the case of a product-based business would include the cost of products to be sold.
As long as you know what the monthly expenses are, and they don't vary a whole lot, and you know what the cost annual receipts are, and what the gross annual profits are, this is pretty easy to set up and put into practice.
With all the above information, we will design the TFCGW account to provide maximum utility for the business sweep and maximum growth of cash value.
Remember, the cash value can be used as a tax-free retirement income supplement down the road as well.
Now, let's say this service business has a monthly operating expense of $10,000, not including the owner's salary, which comes out of the profits, and that may vary. We'll use that figure to base the account design on and to illustrate the outcomes. We want to start the account with cash value sufficient to allow for a leveraged loan of $10,000. We also want to avoid losing the tax advantages due to causing the account to MEC.
For an explanation of what MEC means and how it affects the account, see our video on modified endowment contracts or see the glossary of terms in our book, Tax-Free Cash Growth Warehouse, Nuts and Bolts, available on Amazon.com.
Now, considering all of that, we need to design the account with a high enough face value to accommodate the input of cash funds. And of course, we need to get enough cash value in it to be available right away. The exact figures in the design will be dependent on the age of the insured on the account. In general, we will design the account with 30 to 50% of the total face value in base whole life, and the balance of the face value will be made up of a type of adjusting, renewing term rider. We will also include a scheduled paid-up additions rider and a front-loading of either unscheduled PUA or prepaid term premium. This will provide the beginning cash value to start using with the sweep strategy.
Now, as soon as the policy is issued and the funds are deposited, the owner can initiate a leverage loan for the monthly expenses, $10,000. In our experience, it takes an average of 3 to 5 days for the funds to be received, either via check in the mail or direct deposit into your bank account.
At that point, the business expenses can be paid as they come due, and the income from the business is received, it will be deposited into the business bank account. At the end of the month or the beginning of the following month, however the account is set up, the scheduled deposit to the TFCGW account will be made, and the leveraged loan will be repaid along with the scheduled PUA, which we will consider as interest paid on the leveraged loan. But in actuality, that interest goes directly into the building up of the cash value of the TFCGW account. And of course, then it also receives dividend interest that is paid by the account provider.
That's it. Simple, yes? Now that the first month sweep cycle is completed, you would simply repeat the whole process. Initiate a new leverage loan. Deposit the funds into your business checking account. Pay the expenses as they come due, replenishing supplies, etc. Then, when the next premium deposit is due, pay that and repay the leverage loan and start all over again.
And now, here's why you want to establish this whole regular monthly procedure. We're going to use numbers for the account based on a 50-year-old male, standard, non-tobacco user. To get the initial $10,000 into the cash value for use with this strategy, we designed a TFCGW policy with a $300,000 total face value death benefit. We built in a $100 per month PUA rider. After the initial deposit, which includes the $10,000 front-loaded PUA, the monthly premium total is $480. And the total cash value at the end of the first year is $12,540. By the end of the fifth year, the cash value is up to $37,092. At that point, not only has the benefit amount of the insurance increased to nearly $348,000, but going forward from there, all the premium deposits are going into the cash value and earning dividend interest. So basically, from that point on, the insurance is virtually free, and you are simply making money on all the money you put into the account. That is, every dollar you put in is earning dividend interest.
By age 67, the current retirement age, this business owner will have accumulated $119,000 in cash value, which can be tapped for tax-free retirement income. The death benefit will then be $388,000, and the account will continue to grow.
Now, we've simplified this example a bit for the sake of this video, but you will find a more detailed example of this strategy, along with 9 other examples of the application of the TFCGW strategy in our book, Tax-Free Cash Growth Warehouse, Nuts and Bolts, available on Amazon.com.
We hope you got a good deal of value from this example. Please post your comments and questions here, and please subscribe to this channel.
Aloha, and mahalo for watching.